and thank you for joining this Invelo masterclass on scaling your capital stack. My name is Matt Rodak, the founder and CEO of Fund That Flip. We specialize in financing real estate transactions all over the country. We've done more than $1.5 billion of financing as of the recording of this video, and that's what we're going to talk about here today. Having the capital you need to grow or start your real estate business is often one of the biggest challenges. People don't know the different types of capital that exists, how to successfully prepare yourself for a capital raise, or how to choose the best capital partner for where you're at and the specific project that you're working on. We're going to learn about what are the different types of capital that exist. How do you properly prepare yourself for that capital raise? After that, we're going to jump into how do you choose the right capital partner? So there's a bunch of different types of capital partners that are out there. How do you pick the best one for your business or for your project? And then I'm going to share some pitfalls to avoid. So we've seen a lot of things go well. We've seen things not go as well. So I want to highlight some of the things that you're going to want to avoid when you're out raising capital for your real estate business. And last but not least, also shares, of course, some keys to success for that capital raise. By the end of this class, the learning objectives here that we have are really be able to put you in a position to choose the appropriate capital partner for your business, prepare your company for that successful capital raise, and then understand some things that you're going to want to try to avoid, as well as some major keys to success to set yourself up for the capital raise that your business is going to need. So with that, let's jump right into the different types of capital. And in my mind, there's really 5 different types of capital we call friends and family money. And this is where a lot of people get started. They go out to their network, people that they know, people that have a relationship with them already, and they raise capital from them. The second one is private money lenders. So we'll get into more of this, but these are people that are likely also local to your market, but you may not have a pre-existing relationship with, but are lending capital. The third source is we call private money equity. So these are folks that are very similar to the private money lenders. The difference being is they're investing is equity instead of debt. The fourth one that we'll talk about today is institutional lenders, sometimes called hard money lenders. The difference here is these folks have businesses specifically set up to lend money to real estate investors. And then the fifth category that we'll talk about are banks and credit unions. So there are some banks that will do financing for real estate transactions. We'll talk about what these banks look like and some of the pros and cons.